Good afternoon, everybody. Welcome to TraderMerlin Show for your, what are we on, Wednesday? I'm out of breath. I just had to run downstairs and grab my phone real quick, so I'm winded. I'm gassed just running downstairs. Anyway, hope you all had a great day out there today. Good to see everybody. We got beautiful San Diego in the house. Good. Vernon, Rob C, Katut, Gallo. Katut, I am totally out of breath. I actually want to grab your, I got that other shirt I need to wear for you on the show that you sent me. Got to get that one out there again. Anyway, hello everybody. Big Gab, Lori. We got Doug, Giselle, Dana, Lisa, Thomasina, and of course, Skilled Stocksman and Les Gold, who started the things off. Shout out to Tom, who I got to see today at the Online Trading Academy office. It was nice to see a bunch of students, etc., in the building, so shout out to them. Okay, as I try to gather my breath here, I'm steering today's show a little bit in the direction, well, not a little bit. Normally I steer in the direction of what you guys have asked for and what you want. So a question came in that I thought was a really interesting one. And hello, Chris. It's hot here too. It's like 85 upstairs in my office. I have no AC up here, which is part of the reason I'm glistening with sweat as well. Everybody struggles at trading. I think that's probably a given. And it's the magnitude of our struggles that I guess defines what the final outcome is for us. So a question came through today regarding that, and I'll get to that in just a second. But I wanted to spend at least the first half of the show, or portion of the show, talking about something that took me a lot of time to figure out. And I might draw some parallels to other people's professions here. It's kind of how to overcome trading struggles, because many people get to a point that they just get frustrated. They want to give up. They're done, or they just blow their accounts and they are over. Hello, Obioma. Good to see you as well. So here's the question that came in. Scott says, Merlin, I've been trading futures for 6 months and have lost about 30% of my account. I'm about to give up. Any suggestions for a struggling trader? Yeah, of course, for those who've been following the show for a long time, you know that I actually try to do predominantly that, which is give some guidance, setting rules, helping establish structure and discipline, because without those things, you're going to fail. And my friend Chris, who is here today, you know, he owns a body shop. And I got to ask everybody here, do you think that if your car got in a big fender bender, right, and let's say the whole front quarter panel is shot, do you think that you are going to just read a book online or go look at a YouTube video and all of a sudden your finish and sanding and Bondo and pull out and all that stuff is going to be absolutely perfect and that car's back to normal? I will take the bet that it's not. It may even look worse than the original accident when you Frankenstein your car back together. Now, someone like Chris has spent years studying the art of body repair for vehicles. We did a little internship, right? Worked underneath an established master and has honed his craft. But it's not something that Chris did in like a month or a year or several years. I mean, it took him a long time to get to that level of mastery. And, you know, if we were going to do a show today on body repair, well, I would just hand the microphone over to Chris and say, teach us, because I know that you are the one who's experienced the most in that area. So I will offer some of the thoughts that I see happen regularly, and some things that will help you out, Scott. Tell Scott to switch to options. Well, look, you know what? It's kind of funny you say that, Lori. It's not necessarily the asset class. Now, a lot of people like futures because you can come in with a little bit of capital and have a lot of leverage. Unfortunately, I think that presents some problems. So, as you guys saw, the graphic that started today, let me bring that one back up. I usually try to strategically pick graphics for you guys. So here is the opening graphic for today's show. You guys can see that one. And it's basically showing a guy pushing a ball up a hill. But you notice that the slope of that line is getting rather steep, or the slope of that hill that he's climbing is rather steep. So, you know, my concern here is that many people will start to, I guess, rush trading and get it to where that angle becomes so steep that it's highly improbable that they're going to succeed. So let's just go to, you know, this is ideally what it should look like, which is a slow progression, right? That curve, you start off very slow and it can take you a couple years until you get to the point that you get comfortable. Unfortunately, most people don't even want to, actually, this is probably not even the best curve either. Let me delete this line and draw for you what most people that I see come through the doors at OTA, and that's really most of my experiences working with OTA. The line doesn't look like this. The line looks more like, let me bring up a line here, get my line drawing tool for everybody out at home. It looks more like this. right? They think that they're just going to all of a sudden take a class for a month or a week, and all of a sudden just be raking in the money. That's not going to happen. It's the same analogy I made with the body shop or any other profession you decide to get into. It's going to take a long time, and these slow increment pieces. Your first year, you're probably not going to make much money. You'd be lucky if you break even, honestly, because you're going to make a lot of mistakes. And then you start to get better and you get more confident, and then you start to understand your personal psychology. So you start to get a little bit more confident. Maybe you start to add more to your share size or trade more contracts or more lots. So the answer I have for Scott to start things is 6 months is not even a baby. The answer I have to start for Scott would be whatever you're trading with futures, I would say scale back. So if I don't know how many contracts you're trading. If you're trading 2 contracts, go back to the bare minimum. Maybe go down to the micro contracts and start there. The key here is, and I say this all the time and everybody thinks I'm totally wrong, it is not about making money, right? The key for me in the first year or so, if I could go back and tell my younger self this, because I was in the arrogant camp that wanted to make all kinds of money and had a super steep learning curve, the key in my opinion, to success in this is look at that first year or so as your master's degree, your continuing education. And you have to start small, but personally, I think you have to have skin in the game too. So if you're a paper trader and someone who's been in simulator for a year or 2 years, come on, get real. Trade with real money, but do it with, one share. Commissions are free, so who cares? Just do one share so you get the discipline, the routine. And then you start to find out your strengths and weaknesses. Now, I know personally what my weaknesses are, and I've mentioned this many times. I wrote mine down. I mean, these 10 laws that I have here are the most expensive lessons that I incurred over my past 20, when did I really get active? 98, so 24 years of doing this. These are the ones that cost me the most money. So in that first year, identify everything that you feel like got away from you, the trades that were out of control, or things that you did which caused big losses. And then write those down and make that your Bible. That it should be your 10 commandments. And make a list of 10, right? Call them your 10 commandments. If you're not religious, call them the 10 laws of trading, like I do. And, go back and revise those. My guess is Scott and others that are watching this that are suffering from the same thing is you're probably making a bunch of mistakes and just not paying attention to them because your mind is focused only on making money. As I say, trading's not about making money. Trading is not about making money. Making money is the byproduct of not losing it. So if you spend your first year going through strategies, plans, whatever, whether that's supply and demand or moving average crossovers or what other, migration patterns of elephants, tea leaves, stars, who cares? If you have that plan in play, or these basic strategies, then start to build around that, right? And you start to find out what works for you with that strategy and what doesn't, right? My strategy, the way that I trade, may not work for everybody. Personally, I don't care. I had to modify my trading strategy from about 4 different styles and find out what fit my personality the best and what worked for me. So, you might read a book on trading and go, oh, this is the answer. No. It's possibly one answer, possibly a solution. But again, it all depends on how it fits to you. I could walk down the street with every single one of you and look over at something and go, man, that thing's awesome. And some of you are going to go, wow, that is awesome. And some of you go, that's stupid, right? Like the Cybertruck. We all have different perspectives on that. Some people think it's amazing. Other people think it's the biggest joke ever in vehicle creation. Wherever you stand, the point is, the way that we perceive information, whether that's a trading style, a trading plan, trading rules, an asset class, is going to differ from person to person. So you have to really do a lot of self-discovery. That was my biggest challenge. My biggest challenge was not the market. The market's easy, in my opinion. The market's going to go up, the market's going to go down, or the market's going to go sideways, right? This is not rocket science. I have a 33% chance of getting it right, and odds are it's not going to go sideways very long, right? So let's say I've got a 40% chance it's going to go up, 40% chance it's going to go down, and a 20% chance it's going to go sideways, right? I think you guys would all agree with that. However, I'm going to modify that one. If you look at the way that markets are constructed, that indexes are constructed, right? S&P, NASDAQ, Russell, the Dow, they remove poor performing components and they put in better performing components. So your probability over the long haul, if you're trading for the long term, is actually better to go long. So now our odds are probably going to shift to like 45% chance that it's going to go up, 20% chance it's going to go sideways, and a 35% chance that it's going to go down, right? Just to kind of skew those odds. And right there, you can see why most people who are buy and hold investors do well over time. That said, anybody who started off being a buy and hold investor in November of last year is getting absolutely screwed right now because they're down 20% and probably going to lose a lot more. So I know I'm on a rant, I'm on a ramble here, but I guess it's a topic I should do more often because it is, we can talk about what the chart patterns look like today and Bollinger's and stochastics, all that stuff. But without the foundation, it doesn't matter what house you build, Scott, or anybody else, it's going to come crashing down. So I would question in your question here, you say I've been trading futures for 6 months. One thing you got to ask yourself is, well, what kind of strategy are you using, right? Are you a short-term day trader? Are you a long-term investor? How are you trading? The other piece would be, what are your rules? You say here, you've lost about 30% of your account. I would say that that's not an uncommon thing, especially for people who are new. Now, if you look at where our markets are at today, let's just go back and look at the S&P over the past 6 months, and I'll put a yellow box around that window of time. So there's 1, 2, 3, 4, 5. No, that's way too far. Let's see, June, which would bring us back to January. So, not to sound like a cynical jerk, but my guess is you are biased to the long side, right? Because most people are. Buy something that's going to go up in value. Markets at all-time highs. Conveniently, if you say you've been trading for 6 months, you literally started trading at the all-time high of the equity markets. So you're down 30%, which tells me you're not exactly a buy and hold investor because the market is only down, I say only, I'm sarcastic, 21.8. So you're actually losing more than the market, which means my guess is you're probably over trading, maybe churning your account a little bit, you're getting whipsawed on things. The bottom line is this market is in a downtrend. At this moment, our bias should clearly be selling rallies into supply. If you are buying at a demand zone, it better be damn good demand zone, and make sure that you have a stop loss in place because the odds are better that this trend is going to continue down until it does not. And having started right there at the peak, Scott, that's a really tough spot to be in. So I would reevaluate my trading. I would sit down. I would probably take a week or two off. I know it's tough because you want to trade. You want to make that money back and make back that 30% that you lost. But I would sit down and I'd evaluate my trading. What am I doing right? What am I doing wrong? Right? I've mentioned this many times. Just take a piece of paper, what am I doing right on one page? What am I doing wrong on the others? And be very honest with yourself. If you do something wrong, say it. There's no reason to be embarrassed about making a mistake in trading because it will cost you more money down the road. As everybody here knows that watches this program, I have no problem calling myself a dummy and pointing out my losing trades and sharing those with everybody because not only does it help me, but it also helps out the audience here and understand that we are all human. We're going to make mistakes. But if you don't know what you're doing wrong, you're going to continue to make those mistakes over and over and over again, and you'll probably blow your account. I hate to say it. So regroup, Scott. On a parallel note, this actually kind of happened to me back in, I want to say 99. I was on a real, 98, 99, yeah, somewhere in there. I was on a real bad losing streak. And I think I've told you this before, but I walked onto the trading floor, and my mentor, the guy who taught me, he says, "Hey, Merlin, how you doing today?" And I had my head down. I remember it vividly, crystal clear. And I said, "Oh, can't wait to see how much money I lose today." And he grabs me. He's like, "What are you doing? You already lost." Like, "What are you talking about?" He goes, "You've already set yourself up for defeat. With that attitude, your money's as good as gone. Just give me the, he asked me what my daily stop loss limit was. I said $500. He goes, "Just give me the $500 today, and I'll give it back to you tomorrow." He says, "Take some time off. Learn." One of the books that I really enjoyed reading, which I'm not a huge fan of reading trading books, especially the analytics stuff. I like the more stories, is Reminiscences of a Stock Operator by Edwin Lefebvre. You can find that one on Google for free. Just go type in Reminiscences of a Stock Operator.pdf and you'll find it. What's interesting about that story is it profiles a gentleman by the name of Jesse Livermore. And Jesse Livermore is one of these guys that he started very small. Now, granted, this is in the late 1800s, so it's a very different time, but I think that the moral of the story is the same today. And here's a guy who started with just a few dollars and turned it into hundreds of thousands. Now, back in the 1800s, you can imagine how much a few $100,000 was. But he ended up losing every single cent of that. And then he borrowed more money to start all over again and turn that into tens of millions and then lost it all again. So I look at that story as, look, we can all have great successes. The key is that when we have those successes, to monitor those, put our stop size underneath it, or stop loss underneath it, and never let that go back to zero, right? So let's say even on a single day trade, if I'm up $1,000 on a day trade, there's no way I'm going to go home with less than 500. I'm giving it a $500 wiggle room to move up, but I'm not going to go home with nothing, right? And I think that's the same thing we should look at for long term. If you are a long-term investor, looking at, a year, well, as that year goes on, you should have stop losses and little triggers where you say, I'm going to get out of this because it's going against me. That's the easiest thing to do, but most people just don't do it. So I took a week off, read Reminiscences of a Stock Operator, and I refined my trading style to fit my personality type, which was a fairly aggressive short-term day trader back in the late 90s. I'm not really that anymore. So I guess that's what I have for you, Scott, as far as suggestions. You have to stop trading right now. Figure out why you're losing money. See, if you told me that you were down 10% in the last 6 months, I would actually say you're doing good. And you go, what? How am I doing good? Because if you're only down 10% and the S&P is down 20%, you're beating the market. So you're doing good. However, you're down more than the market. So there's clearly something wrong there. Here's the things I would analyze, Scott. Number one is how many trades are you making per day or per week, right? Figure that out right away. A lot of people will overtrade. And the reason they're doing that is they're looking at a smaller time frame, like a 1 minute or a 5 minute chart. If that's the case and you're trading a lot, move up to an hourly chart and say, you know what, I'm only going to make 1 or 2 trades a day maximum, right? Something that really curtails the frenetic activity of buying and selling all the time, which happens. It becomes an addiction. Once you figure out what you're trading, as far as the quantity of transactions, I want you to look at what you are trading. You mentioned here futures. Are you sticking with things like the Dow futures, which are probably the smoothest, easiest one to trade because of its price point? Or are you trading, the Russell 2000, which is a wild one and moves really fast and has a high price point? Or are you crazy and trading, corn futures and wheat futures and palladium, or getting to exotic stuff? If you're starting out in 6 months, I don't think you should be trading anything other than index futures, right? My guess is you're probably dabbling in crude oil and gold and other volatile commodities. Don't. Go to the indexes. Stick with Dow futures until you get it. One of my favorite guests that used to be on the show, and she's just a great trader and a great human being, is Tilly Allison. Tilly started off trading Dow futures, and that's all she traded. She just traded Dow futures, nothing else. And it's relatively slow moving. So she traded that until she felt comfortable and says, okay, now I can see that I'm consistently making a little bit of money. All right, now that I got that down, let me go and move on to something that might be a little bit faster. Goes to the S&P, steps it up, maybe goes to the NASDAQ, and then steps up and then gets to the Russell 2000. Now, because she started off slow and can juggle 3 tennis balls at once, she can now juggle the 8 tennis ball thing and go a little bit more crazy because she understands her discipline, she knows her rules, and she knows how to map out and complete trades on any time frame with volatile assets. So stick to one thing until you can figure it out. Totally agree, Karen. Absolutely. If you're bouncing from security to security, not going to work. It can work. It's just going to be much more difficult. For example, I'm trying to come up with an analogy off the top of my head. But if you're constantly bouncing from topic to topic, you won't understand each topic in depth. So let's say you're a futures trader here. If you trade, let's say, just the Dow futures, you'll start to see its patterns. It is a living, breathing entity, right? The Dow futures it's made up by buyers and sellers. So you will start to see those emotions in that security. And you'll know that certain times of the day it does this, at certain times of the day it does that, and then it has these actions. If you're trading, if you go Dow futures on Monday and Russell, and then you keep bouncing around, you won't notice those little nuances. And those nuances are what give you the competitive advantage. I mean, if you think about poker players, right? If you go to Vegas, they always say, if you sit down at a poker table and you can't tell who the sucker is, it's you. Well, look, a lot of those people have been at that poker table. They live in Vegas and go to those poker tables all day long. And if you go long enough, you'll see them, right? They're just regulars. They're the ones that are going to take your money. Why? Because they're playing the same table, the same group, and they can spot a cheesy-ass tourist when they roll up with their stupid clothes just here looking all flashy in Vegas, where they look like bums, but they're killing the table. So to me, I guess trading is a lot like poker in that sense, is you got to know the table. You got to know the environment with which you're playing in, and that gives you a tremendous competitive advantage. Thanks, Tony. Oh, good. Glad you finished the futures one. Who'd you take futures with, Tony? Let's see. Make sure you get around experienced traders. Stay away from the so-called gurus. Yeah, Gallo, that's a tough one to do. That's a real tough one to do. As you guys know, I harp on a specific individual simply because the Federal Trade Commission audited his trading statements, and in the lawsuit says he trades very little and he loses money. I would never have known that, right? I would never have known that unless the FTC audited his trading statements and published it. So it's public record. You can go check it out. Blows my mind that this guy can still call himself a trader. Anyway. Oh, awesome. Bashir is great, isn't he? It's funny. I think he's an engineer by background, and you can tell he's so methodical and process oriented. It's awesome. I love Bashir. If he wasn't living on the other side of the world, I would try to get him on this show because he is a fantastic instructor and just a great trader as well. Any other questions here as I wrap up? Because I think I've gone a long time. I went 22 minutes helping Scott here, but I hope that, Scott, let me know what you think and let me know what steps you're doing to improve yourself here. It really is all about you. At this point, I think you have to take a step back, take a deep breath. Don't think about that 30% that your account has dropped. Think of the 70% of your account that you still have. And now what am I going to do with that? And I don't want you to think about, I'm going to make all that money back. Forget about it. Assume that money is gone forever and just focus on your next trade. And say, I've got my entry, my stop loss, my price target. Here's all the reasons why I bought it. Here's all the reasons why it could go against me. And if I feel comfortable, I'll make a trade, right? And make sure you adhere to your stop losses. And then evaluate. Create a trading journal. And consistently go back and look at what you're doing right, what you're doing wrong, and you'll improve yourself. And ultimately, that curve will get steeper and steeper as your skill set gets better and better. You start to feel more comfortable, increase your share size, and then hopefully you can reach whatever trading goals you have aspired to. So Rock says, I know what report said about Sam, but damn, he's doing well in his group and his zones. Well, look, Sirach, I can go out here on this show and I can call out 50 levels a day. 50. And then I can come back tomorrow and just show you the ones that worked. That's the common practice, right? When he was in the XLTs, that's what he did all the time. He just draw zone after zone after zone. And yeah, sure, some of them worked. But look at the time zones, the time frames that he's drawing these zones on. Some of them are so far away from current price that you forget about them until they reach it. And then he goes, oh, look and see, I took that zone. And then ask him, show me a real trading account. Show me live money trading account. Anyway, take it for what it's worth. Simulator does not hurt to go back to sim trading until you can show some consistency. I think, while I agree with you, Lisa, I really think that you should trade live with real money. Right? Trade live with real money. And when you do micros, you're only risking a few dollars. The reason I say that is, if you're in Simulator, you hit a button to buy, it'll pretty much give you whatever price, depending on the platform. So it's not true execution. Number two, it's not true emotion. Even if you have just a few dollars in the game, you're going to feel nervous. You're going to feel anxiety about those trades. And to me, that's really important, right? That's the critical part is, how do I start to get the sweaty palms in a simulator? You won't, because you don't care. You can just delete it, turn it off. Okay, let's go back to start. Trade very, very little. Let's see. Is Samside now giving the exact numbers for the zones? He used to give the numbers, but he just never would tell you exactly how he got them. Right? That was the big thing he did for a long time. Yeah, he's always given exact numbers, Les. He's always given, this is the level, this is the zone, but he'll never tell you how he got that. And he always said, oh, this is how I got them. And you're like, you know what? Your job is to be an educator. So tell people how you got those zones, so ultimately those people can now move away from you. Hey, Joe, thank you very much. And also, I forgot to give a shout out. I saw that NJ, you sent in some as well. So thank you so much for that. I appreciate that. All right. I'm done helping Scott out. Again, if you guys have questions, I am always happy to share from a mentor perspective, my thoughts on your current situation or how you can, potentially improve your trading. Always happy to help out. I think that's really what I have intended this show to be. As you guys know, I'm not looking for handouts. I'm not looking, I'm not getting paid for this. I just love talking about it and knowing that actually I'm helping people out and keeping that greed side out of it. Do you trade based on zones? I do. I have a different way of doing it, but I definitely, when you look at what moves price, it's buyers and sellers, period. So, little Napoleon, Sam would say that he created supply and demand methodology. He can kiss my ass. He didn't create supply and demand methodology. He did not create supply and demand. Cavemen, one guy had fish, one guy had fire. Hey, me trade fire for fish. That is supply and demand. That was created so long ago. And when you look at price charts, we all know it's driven by supply and demand, right? You have support and resistance lines on there. Some will call it supply and demand. Only difference between support and resistance, which is what the industry pretty much talks about, and supply and demand is supply and demand attempts to quantify each of those support and resistance areas, right? So to me, that's really the most important element to it. So yeah, I'm definitely trading zones. I would say I'm predominantly a trend trader. So I'm looking at trends and then I'm adding on to those as they come into supply zones. Yeah, Sue says, Sam got caught by students moving his zones. Wouldn't surprise me, right? Would not surprise me whatsoever. No. How can you? No, don't feel like an idiot. I mean, look, good marketing will sell any product, right? And it's not a patented strategy. You can't patent supply and demand. It's like I'm going to create a copyright on air. It's like air exists. It's here. It's what it is, right? Let's understand how to use air. That's the most important piece. Merlin, what has happened to the Fed to be? Oh, what has happened for the Fed to be abolished? Oh, man, that is a great question. I don't know what that would entail. Basically, everybody here, I think, understands what the Fed is. The Fed is just it's a fraternity of banks, right? It's the banks make up the Federal Reserve. They got a board of 13 members, and they vote on all these policies, which generally benefit the banks. So here you have inmates running the prison, in essence, is what the Fed is. My big concern is that we won't learn from this experiment that we've had going on since 2009. That experiment is quantitative easing, right? Buying just gajillions of dollars worth of bonds with made-up money, which increases money supply. As you guys all know, that's going to increase the inflation rate, which we're now seeing and in all countries right now is much higher than expected. So, to me, getting rid of the Fed would be a great thing. However, I think when you look at it from two sides, you have removing the Fed would be great because we would now be more of a free market economy, not manipulated. However, if you're a long-term investor, you should love the Fed because the Fed creates bubbles. The Fed creates long, big, prolonged moves in the market like they have right currently. So, if you're more of a market timer, you understand that the Fed is great at creating awesome big trends. And as Gallo says here, and the taxpayers are the ones who pay the bill. Yep. And again, a lot of rich people don't really pay taxes. Right? They have ways of getting around paying taxes. So, to me, I would love to see the Fed gone because I think that I would be aware enough of market trends and changes that, if we got into an overextended situation, that we're most likely to come back down. Well, over the past 13 years, we got in an overextended situation. The Fed just kept pumping money in. That shouldn't happen, right? We talked about their ability to buy mortgage-backed securities. Why are they buying mortgage-backed securities? Housing market is like almost its all-time high. Hey, thank you, Chef. I appreciate that, Ruhal. I appreciate that. Thank you so much. So what would it take? It would take uproar on the part of the average American. And I think, and maybe you guys would agree with this, I think that a lot of people don't know what the Fed does. You guys are obviously much more in tune because you're here every day. You're trading every day. I think that you guys probably have a greater understanding of the Fed's role, how they do what they do, and the actions or reactions to what they do. But I would venture to say that the average American, if you said Jerome Powell, they go, Jerome Powell, who's that again? Oh, he's the chairman of the Fed. Oh, yeah, that guy. And say, okay, what does he do? Most are going to go, I don't know. I don't know. That's the problem. If we can make more people aware of how this system works, right? How the economy and how markets work and the role the Fed plays, and make people aware that the Fed can actually create big bubbles like this, then I really think that we could create uproar. We now would go to our constituents and our elected officials and say, hey, if you don't get rid of the Fed, I'm voting you out of office. And they fear that. So I don't think it'll happen. I wish it would, but I don't think it's going to happen. Glenn says, I still have a problem with trend. Trend for me, I can make it as easy as I can, Glenn. Right. Trend is actually fairly easy. If you look at core strategy, Kayla did some great. If you're on my Trading Academy, right, Glenn? I'm pretty sure you are. Kayla did a thing in the self-paced core strategy class. You can just go in there and there's a whole thing on trends. It's excellent. Kayla did a great job on that. I think there's like 6 or 7 videos establishing trends, identifying trends, drawing trends, and what, when they're broken, etc. You can find that in the core strategy class. I don't know the exact video, but they're in there. Let's see. The trend labs will be good too. Merlin, do you trade full time or do you work a regular job during the day? So I do a lot of different things. So my primary, I would say, job is I build content for Online Trading Academy, and I'm now running their entire cryptocurrency program. So that's, we'll call it my day job. So in that sense, and quite often I'm doing swing trades and position. Today I'm upset because I was in meetings today right as the market came up into my zone that I wanted to go to trade off of, to buy some directional puts, and then started to fall away from it. And by the time I got out of those meetings, it had already moved out of my supply zone, and I was kind of upset about that. So I am not a full-time sit in front of my screen all the time trader, but I generally have limit orders out there for different asset classes, but I'm generally trading every day, just not in front of my screen all the time. I find that I can do a lot better by removing myself from the screen. Sometimes when you sit in front of it, you force yourself to make trades. You get yourself in a bad situation because I'm just wasting time. I love limit orders and set and forget orders. So there you go. Is my girlfriend trading? No, she's doesn't understand the financial markets, doesn't care. What would happen to the dollar if the Fed was abolished? Wow. Man, you're putting me on some macroeconomic questions here. So if the Fed was abolished and the ability to print more dollars would disappear, the value of the dollar should increase substantially. Because if you're not increasing the supply and more people are demanding that asset, in this case dollars, it's going to drive the price of the dollar up. So in that sense, you could see the dollar appreciate in value and gain a lot of strength, in my opinion, if the Fed was out of the picture and not increasing money supply like they have. Let's see. I just can't believe how complacent the American people are. Well, Gallo, a lot of... This is a horrible thing to say, but I forget it was one of my professors, or maybe it was John O'Donnell. He says, for the most part, the American people are mushrooms. And I'm like, what? And he goes, yeah. The government intentionally keeps them in the dark and feeds them a bunch of shit. It's like, wow, that's a profound way of looking at it, John. I think it was John O'Donnell who told me that one. But you know what? Most people are too preoccupied with their day-to-day that they don't think about the longer term, right? Your retirements, your 401ks, economic cycles, and that type of stuff. So then I'm buying a Lambo with silver. Whoa. See, here's the thing. I just got done listening to The Millionaire Next Door. I like audiobooks because I just reading bores me. When I drive up north and stuff like that, I always listen to audiobooks. And The Millionaire Next Door is kind of a boring book. It's just a lot of statistics. But here's something that I will tell you about myself. It doesn't matter how much money I have. I could be worth $100 million and I would never buy a Lambo. It doesn't serve me any purpose. Right? It's like I saw a comedian today and he says, what's say about big trucks? They got the drivers of big trucks with jacked up big tires, they got little small peepees. Okay. Kind of dead on there. Well, what does it say about people who drive Lambos and, Bentleys? And it's just, look at me and how wealthy I am. I have no interest in telegraphing to anybody in any way, shape, or form my wealth. I really have no interest in it. So, I was at the office today. I felt bad because I'm in a pair of Costco jeans. I got Costco shoes. I had a T-shirt I got in Aruba, and a pullover zip-up thing I got at Costco. My entire wardrobe cost me like $30. Whereas I know people. I'll pick on Brandon Wendell for a second. Brandon Wendell, he's got to wear like a $300 T-shirt. I don't care. A $300 T-shirt doesn't feel any better than a $15 T-shirt, in my opinion, or a $10 T-shirt. So I drive a Toyota truck. I'm not embarrassed about that at all. I am proud. I love my 4x4 double cab Toyota pickup truck, and I will have another Toyota as soon as this one dies. It's paid for, and you look at how you amass wealth. It's not spending it on stupid stuff. If you want to be poor, act rich. If you want to be rich, act poor, right? That is two unbelievably simple statements, but I can look back at my trading career and a lot of the people I've known in this industry. The ones that are always trying to act rich and driving all fancy cars and got the $50,000 watch, they go broke. Whereas in my experience, from what I've seen in 24 years of this, the people who had the most money, you would never know. I won't mention their last name, but there's one couple that I met years ago. They ran a software company out of Chicago, and they sold that software company for billions of dollars, right? Billions. And it's just a hippie couple, husband and wife, that ran the whole show. And that couple drives Honda Accords. And you would, if you saw them walk down the street, you would never know. You would think they're, something left over from Haight-Ashbury in San Francisco. Oh, you going to Grateful Dead show? Worth billions of dollars. Probably the most valuable person on that entire street, and you would never know it. Yet we all know people who are blinged out to the nines, wasted money and all this stuff, and what do they get out of it? 2,000 Tundra at 250,000 miles? Yep. Oh, when will it die? Well, mine's a 2016 Tacoma. I used to have a 2012 Tundra, but I've been eyeballing the new one, but I just don't see a need to spend money on a new truck. Anyway, I'm ranting. That silver dollar in Branson last week. That's a lot, Lori. That's a lot. I agree. Thomasina says, if I'm wearing anything designer, it was a gift. Agreed. All right, let's go back down to my rant for the day is done. Let's go back to the market since we have not talked about that at all. Yeah, William, I actually do believe that, I don't know if he still drives the same car, but I heard he did. He drove some same old car. But I can tell you this. I can guarantee you, when Warren Buffett buys a new car, he's not going to go out and buy a Rolls Royce or a Lambo or a Ferrari or a Bentley. He's probably going to buy a Honda Accord, a Toyota Corolla, or, something, a Camry, something reliable and cheap. That's how he got rich, watching his expenses. The book that I'm hopefully going to start working on here, which I would love to get done soon, is all about that. It's all about, in my opinion, one of the single greatest ways to achieve wealth or to grow your net worth is just watch your expenses and stop spending it on stupid stuff, right? Every time I buy something, I look at it and go, do I really need this? Nope. Okay, I'm passing. There are some things that I absolutely need, but for the most part, I won't. All right, let me look at the markets for us. As we saw earlier, we did have a very nice rally back up into supply. I'm going to zoom in here. Let's look at the 5-minute chart here of the S&P 500. So we put this on yesterday. Here's a 15-minute chart of it. This is beautiful, guys. We ripped up this morning. We came right to the bottom of the zone. You can see the yellow zone here, which, as I zoom out, was basically from this area we saw on the 15th. And I said, look, I think we're going to rally back up into that. We'll probably hit that and then sell off from there. So again, going back to what I've been talking about, which is if you want to join a trend, in this case, it's a downtrend. Let me get rid of all that. You're looking for a pullback into supply. Well, there it is. There's your pullback right in that yellow box. Now, it's early. It could still go deeper, but it reacted right as it hit it today, and you can see things kind of drifting down. I'm pretty bummed I didn't get in on that one. I did sell some calls on XLY today. I have a position in XLY, so I sold some calls on that, but I did not buy outright puts, which kind of frustrated. I really wanted to get some puts on the NQ and the Russell today, which we'll look at that. Yeah, Japanese engineering is the best, Joe. I'm telling you, it is the best. I mean, Brandon Wendell, I forget the number, but he bought a Maserati. I remember this years ago. Brandon bought a Maserati, and Brandon loves his bling and being flashy with things, to each his own. So he bought a Maserati, and I remember he was parading it around the office and look at this, got a Maserati. The windows didn't work, the locks were broken, and I think an oil change was $2,400 for an oil change. $2,400 for an oil change? And he's like, well, I got a good deal on it. I go, you know what I got a good deal on? My Toyota pickup truck, which an oil change is costing me $29 over here at Jiffy Lube. Probably $39 or $49 now, but still, I can be out of there in 15 minutes. You have to wait a whole day for them to drop your engine out. Yeah. Stupid things. So S&P. We had a rally right up in that overhead supply, and I'll look at these other indexes as well because they all followed the same suit. Where are we going tomorrow? I'm not sure. My gut tells me that was the retracement that we were looking for, and now we're going to see more of a pullback, a sell-off going down and attempting to get to these lows down around 36.50 on the S&P 500. So I'll run from the bottom. Crude oil murder scene today. right? This is ugly. Little Biden's tax reprieve, which we'll talk more about that tomorrow. I got to get some stuff done here today, but maybe I'll bring that up tomorrow. We're going to have Bill Addis on the show tomorrow talking about bonds. But you can see, I actually expected us to hesitate here. We had a small little harami yesterday. Thought we might rally, but of course, the Biden administration saying, no federal taxes on gas, little reprieve. That's nice. Well, crushes the price of crude oil. We saw that drop huge today, down about 4.77%. Bitcoin also struggling, and it looks like it's going to be seeking out new lows. Again, I still think we are going to see 10,000 on Bitcoin. I know it sounds insane, but that seems to be where we are headed, especially when you look at the longer-term picture here. There's really not much to stop it from falling. There's 18 there, 10,000, which I don't have on the screen right now. There's your 10,000 mark, going to be right about there. That's where I think this is headed. 18.3 to me is your next major stopping point, and that could, the way it's been falling, that could hit that tomorrow. All right, moving on up, NQ. Here's a similar picture, right? NASDAQ actually did even a better job of getting into that zone today. We had that yellow box drawn. You can see on the 5-minute, we came right up into it twice, right, early in the morning, and then retested that again later. So there was a double. I hope some people got in this one, right? Is there anybody get in these short today? I hope some of you did. We spent a lot of time talking about this on yesterday's show on how this is going to be the probable thing is coming up in a retracement into supply zones before selling off and continuing this trend. So that was your NASDAQ. Here's your Russell. The percentages I have are off because this is we've rolled over, so it's going to be a little bit different. The Russell, though, didn't even get close to it, right? Which is obviously a bad sign for the markets because if there was a rotation and we were going to see a bull market run, the Russell would have had a bigger rally. It did not, right? The Russell basically just did nothing today and didn't have that rally back up into supply. But the NASDAQ, the S&P did. And then here's your Dow Jones Industrial Average, which also came in that overhead supply zone. So 3 out of the 4 indexes hit that supply zone. The Russell did not, which does not speak well of the equity markets going forward. And lastly, here's a gold chart. Really, it was the positive market today, but there's nothing to speak of here with gold. I actually did sell. I sold a bunch of SLV today, so I sold some puts on SLV, collecting about 1%, and I sold the 19 strikes for July 15th. Let me put this up here so I know. I think long-term I'm going to be okay with silver, so I'm all right adding a little bit more to that position. Yep, got in, but need further discipline to profit, so we'll patiently wait. Cool. And be careful, William, because tomorrow, these markets are real choppy. And we can see that here. Even though it looks like there's a nice trend, we're getting like big up days, big down days, so you're getting whipsawed quite a bit. We had a very ever so slight down day today, as you can see on that candle. We'll have to wait and see what happens out there tomorrow. But if you are short from that level, make sure you put a stop loss above that zone, because if it does spike, you don't want to be left holding this thing. I mean, I for all intents and purposes, think that this market is very weak and we're going to continue to drop. But that doesn't mean that's what has to happen. Anything can happen out there. I need your view on consumer goods stocks. Like what, Katut? What do you mean? Your friend John Rowland said that there are always little bull runs in the down market. So, yes, absolutely. And quite often what you get are really sharp moves. What they'll call, the bear trap. Bull trap. So, you look here, and this is the one that got me, right? So you look here. We're in a beautiful downtrend, right? Everything looks great. Up to that moment, everything looks like lower lows, lower highs. And then all of a sudden, we break above 4,100 on the S&P. Could this now be all of a sudden reversal and here we go? Well, it could be. So, got out of all my short positions, and then all of a sudden, 2 days later, bam! Oh, son of a biscuit! All right, kicking myself for that one, but it is what it is. I gave back a good amount of my profits on this short trade here, but still made some money out of it. Unilever and Procter & Gamble, huh? Well, you look at companies like Unilever, how do you pronounce it, and Procter & Gamble. Obviously, these are consumer staples, right? These are things that you really are not going to, start skimping on your toothpaste or toilet paper or shampoos. I'm still going to be taking a shower every day. I'm not the type of person that's going to go, we're in a recession, I better do a shower once a week. So you would think that these would perform better. Now, as we looked earlier, you're looking at the equity markets down about 20+%. Well, to the lows here for things like Procter & Gamble, which I have on the screen, it's slightly better than the market, ever so slightly. That said, I got this comment the other day from one of the viewers And he's like, no, look, I don't usually see everything going down. Well, when the bear market comes, and I think that we're starting to see a pretty pronounced bear market, you're going to see everything drop. Now, let's say the S&P drops, I'm making up a number, let's say the S&P drops 20%. Well, we can look, actually, let's just do an experiment right now. Let's go out to stockcharts.com. Okay, so we'll go to stockcharts.com, and I'm going to create a perf chart. All right, there's a sharp chart. I'm going to go performance chart, and I'm going to add in SPY, so I have the market, and then I'm going to add in a bunch of different market sectors. So we'll do energy. Here's XLE. Here's financials, XLU, XLY, XLV. Get some healthcare in there. Oops. Why am I putting S's? XLF, XLE, XLY, XLU, XLK, and I'll even add in something like, IYR. Add in some real estate, right? Or even some gold, right? Just to see the performance that these have had. Does Warren Buffett shower every day? I don't know. I don't know if I want to know. So let's go back just to the beginning of the year. All right, so there's 200 days. This is market performance since the beginning of the year. And you can see that there was one that was head and shoulders above the rest, right? That was energy. But energy subsequently in the past couple weeks has just cratered, but it's still blowing away the entire market since the beginning of the year. Now, if you look at the S&P, unfortunately, I don't know if there it is. S&P is down roughly 24%. You can see it right there. But you do have some sectors that are down even worse, right? So here is consumer discretionary down 30%. Technology down 30%. But there's some that are better. Utilities, 5.9. You have gold and energy are still up. My point is that when the markets sell off, and it's an abrupt sell-off, everything is generally going to go down. Everything. So, looking at those consumer discretionaries that you're asking about, to me, they're still going to go down. They just may not go down as much as the overall market. So in this case, if I still feel the market's going down, what am I doing? I'm looking to short rallies, right? So where am I look? Well, maybe this area right up here for Procter & Gamble. All right, maybe that's my area to be going short on it. But all in all, I have to have a bearish perspective because the overall market. KMB, no one's giving up their toilet paper. Similar, right? And I'm just going with the short perspective until I'm proven wrong. It really, this is a messy zone. It's somewhere right around in there would be that next major zone here. But the bias has got to be the short side. Now, you can see that Kimberly-Clark was selling off a little bit before, but not as aggressive as you saw with Unilever. With Procter & Gamble. So if you haven't, please go over to JYP. I'll put USD JPY for that one. So in this example, it's going to be the opposite, right? You look at what's going on with US dollar. The Japanese yen just keeps getting weaker and weaker and weaker. Right now, the US dollar can buy you about 136 yen, whereas just back in March, it could buy you 115. So it's gaining, the dollar's gaining tremendously against the yen. Now, it says, please go over Japanese yen, and down market usually should go up, but Bank of Japan is very dovish. Sure, they are very dovish, and they're not going to change. Again, the thing is, what is the rate that Japan is charging central banks for their currency? It's negative 0.1. What's the rate that the US dollar is charging? Well, if you're not sure, you can always go out here, look at our Fed funds. All right. You can always look at this chart here. It'll tell you what the Fed funds futures is. So there you go. Current target rate is 1.5 to 1.75, and they're expecting 50 basis points. So let's just call it 2%, right? So that means I can get 2% for holding US dollars, and I also get the 0.1% for holding Japanese yen. This is going to continue to go up. USD JPY is going to continue to move up simply because the dollar is paying more money for people to hold it. Right? So if you're doing the carry trade, every time they raise rates, you're making more money on the carry trade by holding USD JPY. Now, the only way to stop that is if Japanese markets raise it from negative and go somewhere positive. and now all of a sudden it eats away at that rate, then you'd start to see this drop because more people will be less inclined to hold USD JPY. Right now, the trend is your friend until the bend at the end. I would agree that the slope has changed dramatically. Right here you can see a beautiful trend line where it's moving up from January of 2021 through roughly March of 2022. So you got about a year, a little over a year where it was a beautiful uptrend. And then all of a sudden, it's like somebody shifted this thing straight into fifth gear and we just went parabolic. Why? Quantitative easing or quantitative tightening, right? Unwinding of the balance sheet and the raising of rates. So right as we started to raise rates and do that aggressively, the dollar soared. I don't see that stopping, right? The Fed has already telegraphed and said, we're going to raise rates. Here's July 27th. Right now we have a 50 basis point increase is about a 95.7% probability according to the Fed funds futures. There you go. At the outset of the pandemic, didn't you buy out of the money puts several months out? I think it worked. No, you're wrong, William. I actually, I bought deep out of the money puts, and for a couple days I was up huge. I was up like $30,000, $40,000 on that trade, but then I ended up losing significantly on that one because I told myself I was going to hold them to 1 month to expiration. If I remember correctly, it was May, June, July, and it was May, and I was going to get out the third week of July. I followed my rules and ended up losing a lot because, as you guys can see, that market soared. So it was one of those, that was a swing for the fences kind of trade for me. I knew that going in, and I knew the risk, and I said, I'm willing to take that risk. But basically, when we were here, I think it was like right about here, March, April, it was in May. I think it was right in here. It felt like we were forming a double top. And I thought we hit it. I thought we came back into it. We had a shooting star, a little doji right here. And I thought, okay, here we go. We're drifting down. And then it just went boom and spiked up. So unfortunately, no, that was a big losing trade for me. Let's see. All right, I think I got most of it done, and I got to get out of here before it's under 2 hours. Let me see if I can read this question real quick for Les since he's here, and he always sends in questions on the YouTube video, so thank you, Les. I always love when you put questions on there. I appreciate it. He says, trends are down, so many investors might look to go short. I got to stop you right there. 90% of Americans have no idea what shorting is. The vast majority of Americans have no clue what shorting is and don't know that you can make money when things drop. So I don't agree with that first part of the statement there, but let's just assume people are going short, okay? Trends are down, so many investors might look to go short. The best trading would be during a pullback or correction. For trades that might last less than a week, are there any trend lines to look at to see this correction, like when an 8-period moving average crosses the 21, but the 21 is below the 50? You can make that relatively complex. I think you can look at the 821 crossover, which, Brandon Wendell loves the 821. That's just giving you kind of a trigger buy and sell signal, but it's, in my opinion, it's lagging, right? Anytime you use a moving average, they're lagging indicators because it's using old data. I'm not a fan of looking at moving average crossovers, but to get to your question, which is if I'm trading a short-term time frame, what am I going to be looking at? Well, you're going to look at the trend for that time frame. So, for example, we're looking at the market right now. Trend is down, right? There's no arguing that. So if you're trading for the next, few months, bias should be just to go short, right? However, if I'm looking at trade might last a couple days, a couple weeks, I might be looking at the 4-hour or something smaller, maybe the hourly. In this case, it still paints that same picture of we're in a downtrend, but I would always look at the trend here because you might find a strong uptrend on a 4-hour or maybe even an hourly chart. Let's look at an hourly here, right? This still is going to tell me the same picture that I would whether I look at a daily 4-hour or not. And basically what it would say is if it breaks above 38.40, and closes above it, go long, right? That's how I would perceive this, regardless of what time frame I looked at. So let me see if I can find something. Let's go Bitcoin. Now Bitcoin's going to be awful, regardless of trend as well. Let's go look at, let's just start at something that might have a different perspective here. No, we're not going to do GameStop. I'm trying to bring up something I don't normally look at just because, let's go MJ maybe? Oh God, MJ. This has just been singing taps for months now. This has not got a break. Urban Outfitters. No, that's still down. AT&T. Okay, here's one. So you look at this chart here of AT&T, and it's not really that great of a downtrend, right? It's kind of really choppy, although you could argue it's making lower highs and lower lows. Actually, lower highs. It's starting to make higher low. higher highs. If I go to something like the hourly, now all of a sudden, if I've been buying, let's say, a breakout above this level over here at $19, $19.90, I have to look at this trend and say the trend is now moving to the upside. Therefore, I plan on going long in this specific security. Although, for anybody who's trading AT&T, you are coming into some pretty nice supply zones. Just saying, that might be something for you to look at in the next couple of days. But closing that gap, boy, if it gets to 2070, might be a good short on AT&T. But the point I'm trying to get out there, Les, is you can use all sorts of moving averages and indicators to help you, but it's really the time frame of your charts dictates the time frame of your trades, right? So I'm generally looking for swing trades now. I don't do too much day trading anymore. I just don't have time to sit there in front of the screen. So for me, I'll start off with that daily time frame. That sets the whole stage, where we are, where we've come from, and maybe where we're going to go. From there, I'll whittle it down to, let's say, the 4-hour, the hourly, get me down to a 15, which is where I might make my entries. And if those entries work and the trade starts to move in my favor, I move the stop losses up, maybe I'll look at the bigger time frames and say, okay, what's the next big objective here if this thing continues to run? So your time frame to me dictates if you're making trade last less than a week, then you're looking at hourlies, 4 hours, somewhere in there. I would start with a daily, though, just to see where the picture has come from. Let's see, what else did I have? And last, real quick, Zanzibar. I'm not sure if you're here today. I hope you are. I was going back through past shows and checking up, and you did mention that people who ask for trading platform help. You mentioned me, and I did ask about TradeStation. It was the matrix question, so I don't have the matrix up here, but what I think you're referencing is, for those who don't know, the matrix is just simply a level 2. It shows the buyers lining up and the sellers lining up, right? So you can see kind of where the orders are piling up. In the equity, when you have stocks on there, it used to be that the number in parentheses next to the number of the bidder ask size. So let's say it said 100. Well, if it's futures, that's 100 contracts. In the equity, sometimes it would say, let's say 100, which means 100 shares. But if it had a parentheses and a 2, that would mean it's made up of 2 participants, meaning there's 2 people making up that bid. Sometimes, you have 5, 6, 7 different participants, and it would show that one. I believe that's what that number meant. I've actually looked on TradeStation. I haven't seen that one since you sent this question. I've gone through it repeatedly and looked. I just don't see it. But if I remember correctly, that's what it used to look like, right? It used to be, it was identifying the quantity of people at that specific level, the number that made it up. All right, last one for Obioma. Merlin, if you look at the lower time frame, like 5 minutes, how do you identify the reversals? Well, you're just going for a reversal of the trend that it's in, right? So if I've got a 5-minute uptrend and it rallies into supply, I'm anticipating the reversal. Doesn't have to happen, but I'm anticipating it. And if it starts to move away from that zone, great. I got my reversal. Boom, let's go short. So I'm basically using whatever the supply and demand zones are on that time frame. So if we go to a specific security, let's go. I'm just going to pick something random here. How about platinum? All right, I'll go a 5-minute time frame. So here's platinum on a 5-minute. I don't see anything that's really that interesting on this one. Maybe this level up here is it kind of had a really aggressive sell-off of it. So if I'm looking to trade platinum on a 5-minute time frame, well, right now, nothing. Boring. But if it got up to, let's say, 9:30, well, that's my supply zone. I'm looking to go, we're not doing an hour. If we get in that supply zone there, I'm anticipating it selling off. So I'll wait for it. I mean, you can do it one of 3 ways. You can wait do it as soon as it gets to the zone. You can wait for it or wait for it to leave the zone because, it could break out. Again, that's a decision you have to make as to when you want to execute, but I always enjoy if it comes into the zone, I'm going to make that trade, and if it gets out of the zone, breaks through, I'll just simply dump it right away and be done with that trade. All right, here's the outlook for tomorrow. Calendar-wise, you've got FedEx, BlackBerry, Rite Aid, Accenture, and Darden restaurants reporting earnings, and to wrap everything up, here's your economic calendar for the 23rd. Really a lot of flash services and manufacturing numbers coming out for the entire world, but a lot of U.S. stuff. You have unemployment claims, current account, flash manufacturing PMI, services. You have Jerome Powell testifying yet again. And the one that's going to be interesting here is a tentative one, the bank stress test results. To me, this is going to be a smoke and mirrors piece because the stress test tells you how solvent banks are going to be. Right? How can they withstand a big market correction? Remember, they have had, I know, Margaret, damn it, 1 hour. They have had 0 reserve requirements, meaning banks are not required to hold any of your money. That happened with COVID, and they have not raised it. So to me, these stress test results are probably going to be pretty ugly, and I anticipate hearing things about the media saying, hey, the stress test didn't look so good because banks have lent everything out. That's how the economy got back on track. Loan, they did all this stuff. Well, what happens if there's a run on U.S. banks right now? If we all went and tried to say, give me my money, the doo-doo is going to hit the fan because it's loaned out. What do? They're going to start calling loans to get those assets? Ugh. Could be real ugly. So I think the stress test might create some negative waves in the equity markets. But again, I think they're going to candy coat it and make it like, oh, it's okay, we're fine, it's not that big a deal. But deep down, I think that the bank stress test is going to be a pretty ugly one. All right, that's going to do it for me. I went way longer than I wanted to do today. If you guys have comments, questions, feedback, I'd love for you to post it down below the YouTube video. I think that helps. If you got somebody who's struggling at trading, tell them to watch the beginning of the show. Hopefully that will help get them on the right track. I know we've all got friends who struggle at it. They all want to get rich quick. Trading is about getting rich slow. It's about building slowly. More importantly, it's about learning how you operate, what goes on in your brain, and that's pretty much what we talk about here on a regular basis. Of course, if you want more details, I always recommend Online Trading Academy because, hey, I teach for them, so there's that. Tomorrow we're going to have Bill Addis on the program, who also teaches for Online Trading Academy. We're talking bonds tomorrow, so we'll look at the big picture macro stuff, interest rates, Fed, Jerome Powell, central banks. Should be a fun one. Hopefully, I will see you all then. If you have other questions, email me at TraderMerlin@gmail.com. Till then, happy trading, everybody. I'll see you tomorrow.